So now I have these crazy numbers in my general ledger that don't agree with my balance sheet. So what do I have to do with that? Well, what you're going to have to do is we're going to have to, you know how we closed, or not closed, but how we organized here? How we took these income amounts and plugged it into the equity and brought in the draw to become this ending balance here. Well, we have to do that manually now in the general ledger to make that happen. So this is what you call closings. So what we end up doing, and I'm not happy with this because you can't see it. Oh, I guess that should do it. We need to get our temporary accounts, which are revenues, expenses, all these expenses, and the draw account, which is somewhere. Where's the draw account? Right here. Those all have to read 0. Now, to do that, we use an account called the income summary, which never really shows up on any type of financial statement, but it's very important into getting all of the revenues, then the expenses, and the draw account transferred to the capital account, or owner's equity as we call it. So let's see how that might happen. We have 4 entries that you do. You close the revenue accounts, you close the expensing account, you close the summary account then, and then you close the draw account. So let's kind of take off and do this one step at a time. Revenues have a credit balance. So if I want to make that account 0, I need to credit it for $16,000. And the minute I do that, that is now 0, right? We have 0 in that account. There's nothing there. Gone. So what do I do with that? Well, that's what this income summary is for. I'm going to credit the income summary for $16,000. And it's going to have a balance, a credit balance of $16,000. Now, the ultimate goal is to have the income summary be 0 also. So next, I've taken care of revenues, we're done. I have to close out the expense accounts. Now, they all have debit balances, so they have to be credited. So I'm going to credit depreciation expense for $2,500. Makes that 0, correct? I'm going to credit supplies expense for $300. Put that down here. That makes this 0. And I'm going to credit internet expense for $250, and it makes that 0. So now when I do that, I need to debit something, and that's going to get put into the income summary for, oh my goodness, I can't do that in my head right now and talk. 300 and 250. It's going to come up to $3,050 as a debit. Now, what is that truly? If I compare $16,000 to $3,050, don't I come up with the income statement of $12,950? And that's the balance I have here. So I need to get rid of that. To get rid of that, I'm going to debit it for $12,950. Right here. I'm closing out. And guess where that goes? That goes into owner's equity or into capital account, as they call it. Now, what is that doing? Aren't we just doing this here? Because I took my beginning, I had my investment, and then I added my net income. That's what I'm doing here. So what kind of balance does that give me right now? That gives me 27,950. That gives me a zero balance here. So I'm done with the income summary. I'm done with all of this. I've got all of these accounts closed out except for the draw. And the draw account goes to a capital account. So it needs to be credited. I'm going to credit this. That makes this balance zero. And I'm going to debit the capital account or the owner's expense right here, which makes this 26,950. And lo and behold, that should be what we have in the balance sheet here. And it is. Here you go. That's the number we were shooting for, and that's the number you now have in your owner's equity. And now it's just a matter of completing out your worksheet so that you know everything is in balance. So what do? Okay, so that entry, I guess I should bring that entry up. I wonder if I can bring that entry up. We did these entries. We applied them to the general ledger. It's correct now, or we hope it is. And now we need to apply it to the worksheet to make sure we have everything correct. So let's go clear out here. These are the entries we made. There. Okay, so let's apply these and see what happens. I'm going to close it. I'm going to debit the I'm going to debit the revenue. I'm going to credit all of the expenses, which are here. And 300 here. Whoops. And I'm going to credit the draw. And that all essentially, the difference gets taken and added to your owner's equity, which we can't see here, right? So hold on. Now, if I add these two columns up, they don't balance, but I have a difference of 11,950. If that amount is added to the owner's equity account, you're going to come up with 26,950. So let's see if that balances out everything. Okay, we have cash at 97.50. I have accounts receivable at 15,000. I have my computer at 5,000. I have accumulated depreciation at $2,500 credit. I have supplies at 200. I have accounts payable at 500. And if I add that 11,950 to this, I should come up with 26,950. And that should balance. Let's see. Pretty gutsy doing that on it. It does. So now we've completed the whole circle. The closings have transformed the balance sheet to agree with the general ledger, and we're ready to start in all over again. Does that help? I hope so. Thank you.